Have you ever wondered how investing has evolved in this digital age? Just a few decades ago, investing was a game played primarily by Wall Street tycoons and wealthy individuals. But today, the landscape has dramatically shifted. Thanks to the advent of the internet and innovative financial technologies, investing is no longer confined to the trading floors of Wall Street. It's become a democratic activity that anyone with an internet connection and a bit of spare change can participate in. And then, enter the world of digital currencies. These digital assets, born out of complex algorithms and cryptography, have taken the world by storm. They've introduced a whole new dimension to investing, one that transcends geographical borders and traditional financial systems. Digital currencies are creating a wealth of opportunities for investors around the globe, promising potentially high returns and a chance to be part of a financial revolution. But what exactly is this digital currency we keep hearing about? Cryptocurrency, a term that has become a buzzword, is a type of digital or virtual currency. But what does this really mean? Picture it as an online version of money, a way for people to transact over the internet. It's like an online version of gold, valuable in the digital world. What sets cryptocurrencies apart is their decentralized nature. They are not controlled by any central authority like a government or a financial institution. Instead, they operate independently using complex mathematical algorithms for security. This is known as cryptography, hence the term cryptocurrency. Now let's talk about Bitcoin, the pioneer of cryptocurrencies. It was launched in 2009 by an unknown person or group of people using the pseudonym Satoshi Nakamoto. Since then, Bitcoin has paved the way for thousands of other digital currencies, each with their unique features and uses. Now that we know what cryptocurrency is, how does it work? Cryptocurrencies work through a technology called blockchain. Now, what exactly is blockchain? Picture it as a digital ledger, a bookkeeper of sorts that records all transactions made with a particular cryptocurrency. It's transparent, secure, and decentralized, meaning no single entity has control over it. Let's dig a little deeper. When a transaction is made, it's grouped with others into a block. These blocks are then chained together in a linear sequence, forming the backbone of the blockchain. But wait, where do new coins come from? This is where the process of mining comes into play. Miners use powerful computers to solve complex mathematical problems. When they crack the code, they're rewarded with new coins. This not only creates new cryptocurrency, but also verifies and adds transactions to the blockchain. So, this is the mechanism of cryptocurrency, a revolutionary financial system that's reshaping our world. So, how can you, as an investor, take advantage of this? Investing in cryptocurrencies can be a lucrative venture if done wisely. It's not just about jumping on the bandwagon, it's about understanding the game. And the first rule of the game is thorough research. The crypto market is a complex ecosystem with its own set of rules. Understanding the market trends, the technology behind the currencies, and the potential risks involved is paramount. Moreover, the crypto market is notorious for its volatility. Prices can skyrocket or plummet overnight, hence the importance of risk management. One good strategy is diversifying your investment portfolio. Spreading your investments across different cryptocurrencies can help mitigate potential losses. However, with the digital nature of cryptocurrencies comes the risk of digital threats. Ensuring the security of your investments is equally important. Implementing strong security measures like two-factor authentication and using secure wallets can protect your investments from potential threats. The world of digital investing is vast and filled with opportunities. It's up to you to seize them.